Did the Arizona housing market just quietly shift again? The latest numbers reveal some surprising moves that buyers, sellers, and investors need to pay attention to. First, fix and flip investors are winning big right now. Homes resold within 180 days posted a median price of $423,500 compared to $322,000 purchase price, $101,000 margin, or up to 30% markup increase. And when you remove iBuyers like Opendoor, traditional investors do even better, hitting a 34% markup with 107,000 median cross margins. Meanwhile, iBuyers like Opendoor or OfferPad fall far behind. Second, the Comfort Market Index is showing a rare split. 9 cities shifting toward the buyers, 9 cities shifting toward the sellers. Phoenix, Gilbert, Creek Creek, and Maricopa all moved into the stronger seller territory, while places like Paradise Valley and Peoria move more toward the buyers. Overall, CMI changed just 0.6% negative, signaling the buyer advantage is weakening fast. Alright, with that, let's dive into what these trends really mean to you and what the number means to you. Here is the fix and flip investor chart. So as you see, the blue bar is the purchase price, and then the orange bar is the resold price. We see that this is a data provided by Comfort Associates. Homes that are bought within 180 days and resold in September posted a median sale price of $423,500. This is September. This is the newest number that we see. Well, meanwhile, the median purchase price is about $322,000. That is about 32% markup. So think about it. If you buy a house at $322,000 here, you can resell for $423,000. That is more than $100,000 profit from the original purchase price. Now here's the chart to when you remove all the buyer's company. The median sold price is $428,000 and median purchase price is only $320,000. So this is actually a 34% increase. This is 107,000, more than 107,000 markup, right? 34%. OfferPad only 16%. This is one of the two biggest iBuyers in Arizona right now. Only 16% markup, and Opendoor is 12%. When I talk about iBuyers, compare them to the traditional flippers. They are very similar. However, OfferPad and Opendoor is a big corporate. They have a lot of money from the stock market versus the traditional flippers, maybe someone who do locally only, or maybe they can do multiple states, but they are not big corporate. This is one of the reasons traditional, like obviously when you see this, okay, you see that the traditional investor, a lot of people are still interested in buying, flipping the house and resell it to the market right now. They make better buy decisions. They don't rely on, well, they do rely on algorithm model, but they also rely on experience as well. And then also they have a network of people who they can use that maybe save them some money on renovation, or maybe there's some renovation ideas that is attracting the potential buyer. Especially for iBuyers like OfferPad and Opendoor, they always have an overhead cost because they do have a lot of like employees that they have to pay. So in short, the retail investor, the traditional flippers, is outperforming the tech investor right now. So if you are interested in fix and flip in Arizona, you could potentially win big in nowadays. Right? Obviously, you see from 2023 until 2025 right here, the gap is about the same. It's smaller here at the beginning of 2023. It's similarly smaller gap here, but as you see, almost a flat line, and therefore the gap is almost the same. So it's been like that, and if you do have some interest in this, this is definitely the time for you to consider it. Even though a lot of people are concerned about like interest rates so high, and especially with flippers, you tend to also have to pay a high interest rate, and therefore it's concerning people. But obviously for $400,000 house, that's almost like $25,000 return. Okay, so you definitely want to look into this more and then talk to an expert about fix and flip and identify a good opportunity for you. So that's number one that I want to share today. Number two that I want to share is the Comfort Market Index. This week's snapshot show that the market is still leaning toward the buyer. The buyer is still the winner right here, but the shift is slowing down a lot. Obviously, you see here the CMI change is only 0.6% negative. Last week is 2.1% negative, and the week before is more negative, I think 6 point something. Now last week is negative 2.1, and this week is only negative 0.6%. So that major slowdown is the shift towards buyers. The demand is slowly growing again, and supply is no longer trending upwards. That's the main reason why the CMI doesn't change in favor to the buyers a lot. The buyer-friendly momentum I felt this fall is fading. It's a little bit no longer there. A market reversal toward the seller is likely within the next 2 weeks. I'm going to be looking very closely to the CMI, the Comfort Market Index, in the next 2 weeks, because this is a signaling that the seller may gain advantage for the next 2 weeks. 9 cities that move in favor to the buyers this month is Scottsdale, Avondale, Mesa, Glendale, Peoria, Goodyear, Surprise, and Santa Maria. Those are the 9 cities that moving in favorable to the buyer. What about the other side? when they're moving toward the seller, there's also 9 cities because we have 18 cities now. Moving forward, advance to the seller, including Fountain Hills, Chandler, Gilbert, Hay Creek, Phoenix, Tempe, Queen Creek, Buckeye, and Surprise. I'm not the city of Surprise, but surprisingly, Maricopa is also moving favorable to the seller. Although the comfort market index right now is still very low, only 47.9. It's still very heavy buyer market in Maricopa. This mix tells us we are in a very zip code driven market. A lot of people say Arizona market, but it really depends on where you are looking for houses. If you are looking for houses in Chandler, for example, you might find multiple offer situations. You might find that you cannot negotiate a lot in that area. Similarly, Gilbert. But if you're looking for houses like in Santan Valley, or Surprise, or Goodyear, or even Maricopa, you have the strong negotiation power there. But as a buyer, so definitely watch out and definitely do some research about the market that you're searching for. And sometimes even within the city, some zip code is more favorable to the other as well. So you have to be really rely on your real estate agent on data-driven information to be able to make the right decision. Next, let's look at the national data. And the first I want to look at is the mortgage rate. This in front of you right here is the mortgage rate from the beginning of 2025. We are getting very close to the end of 2025 already, believe it or not. I still remember the new year of this year, and now it's already the end of the year. So first, let's look at the 30 years chart. Okay, at the start of 2025, we have about 6.9, and it's go up almost to a little bit past 7% in mid-January, keeping a lot of buyers like, I'm not gonna really buy. You know, like they decide to hold off when the interest rate is go over 7%. However, though, the trend quickly reduced all the way to the beginning of March. From February to March and then to April is about the same, like around 6.6. The trending down from 7.1 to 6.6, and it's holding like that until middle of April, 6.6, 6.7. And after a small jump in May and June, right, it's a little bit up here, 6.9 is the maximum, and here you go. Starting May until all the way now, as you see, this is the trend of going down. This is the down trend, and this is a very steady decline all the way through October of 2025 this year, hitting the lowest level of 6.2%. 6.2%. This is, a lot of you say, 6.2 is still a lot, but here's the thing, here's the fact, right? This is one of the longest and most consistent rate drops we ever seen in all year, and it's directly impacting affordability. Why is that? Because the biggest expense in the mortgage payment is the principal and the interest. It's impacted by the interest rate, and as the interest rate goes down like this, the monthly payment change. And how is it changed? Let's look at the chart here that represent this right here is the monthly payment by time according to the interest rate change. If your monthly payment in May is about $28.60 in May of 2025 this year, in June it's already dropped about $100 to $27.42. July dropped about $26.71. This one already under $2,600 in July and August, right? By October, your monthly payment has been dropped about to $25.30 per month already. That is $300 less compared to May. And that's not a small adjustment. In my opinion, $300 is not a small adjustment, especially nowadays, a lot of inflation and the cost of everything is rising, right? For many families, that difference between whether they qualify, whether they can afford for a house or not, between qualifying for the loan is also between meeting the budget to buy a house or living comfortable, or they're gonna be, miserable when they buy the house. So that's a good news for the buyers. That's a good news for the buyers because obviously it helps a lot. The other good thing about today's market is wages. Okay, why do I say it's good? This graph shows the total money, the total amount of money paid to the worker across private sectors, and the trend up. Very up, steady and consistent. From 2006 to today, wages have been a long-term upward path. There was a dip around 2020 right here during the COVID, okay, because of the economic shutdown and everything. But the rebound since then has been very strong, even stronger than the period before that. Higher wages, lower interest rate, and stronger buyer power. That's a very good indication of the buyer has more stronger. So this is the rare moment when financial side of ownership is actually becoming more favorable from multiple angles at the same time. So that is the fact in today's markets, and that's in contradictory with a lot of people about the economy gonna causing slowdown in income. We see that wages keep increasing and increasing every single month since COVID, since 2020. and the mortgage rate has been dropped already since the beginning of the year of 2025, and it is predicted to continue decrease all the way to the end of 2026 to create more affordability. So now more than ever, as a buyer, as a first-time home buyer, and if you by chance a homeowner and like business owner, you need a specific strategy that fits for your family to negotiate the deal, to get to look at the right house, and to understand the home buying process. As a seller, you do also have to consult the specific marketing strategy for your house, and therefore you will be able to sell the house quickly at the right time at the right price. Thank you so much, everyone. Bye bye.